Good evening, everybody, and welcome to Fonti International. I'm Alexandra Georgiev, and we're going to be together for the following 1 hour and a half. And let me tell you that this is last month of trading for the year and first day of the new month, because it's the 2nd of November. And so far, as we can see, major downturn for the US indices, and there is a reason. We're going to talk about it. But first of all, very quick look at the major headlines. Stocks headed toward biggest decline in almost 2 months on a report that President Trump will increase tariffs on China if Washington and Beijing can't reach a trade agreement. President Trump said he would restore tariffs on steel and aluminum imports from Brazil and Argentina, saying both nations have been devaluing their currencies. British Prime Minister Johnson's Conservative Party has held lead over the opposition Labour Party, according to ICM opinion poll. Economic growth in the Eurozone is weak, but consumption has remained resilient, and the European Central Bank's easy policy continues to lend support. The EU has opened preliminary investigations into Google and Facebook's data practices, assessing whether the two US tech firms are complying with its rules in the region. As we can see, major stories for this Monday evening, and certainly we're going to comment each and every one of them. But I should say that except the Trump tariffs policy towards Latin America and also China, we did see a little bit of disappointing US manufacturing ISM figures today. So this is absolutely contributing to this major decline. I want to show you the stocks so far. S&P 500 is down by 0.85%, Dow 0.86%, and Nasdaq Composite 1.30 in the red territory. As we can see, it's a pretty difficult day also for mid and small caps. Russell 2000 down by 1%, and the VIX index finally higher at the 14.7 level, which is almost 15, but we did see record low levels in the last few trading sessions, and also, of course, record low volumes except from the volatility index. I want to also show you the fixed income. So here the 10-year treasury yield is 1.82, the 2-year 1.61, and the 3-month 1.58. As we can see this evening, we're witnessing slightly lower treasury yields. We're going to be back on the topic, that's for sure. But first of all, let's have a very quick look also at the European trading session. Of course, after President Trump said that he's going to most likely restore tariffs on aluminum and steel tariffs on Argentina and Brazil. And not only, we've heard also that there might be additional tariffs on China if agreement won't be there. There was not really positive reaction of the European indices as well. For instance, Stoxx 600 closed down by a little bit more than 1.5%, with all sectors and major bourses deeply in the red territory. And I want to show you in particular the German DAX. Have a look at it, down by 2.05%, and the FTSE MIB, the Italian stock exchange, 2.30 in the red territory. Also the French CAC 2.01, and the FTSE 100 down by a little bit more than 0.8%. Not really positive trading session for the European indices. We're also going to comment this, but first of all, I want to start with one of the major stories, and this is certainly regarding, of course, the trade policies of President Trump. Actually, he said he would restore tariffs on steel and aluminum imports from Brazil and Argentina, saying both nations have been devaluing their currencies. Mr. Trump made the announcement, which hadn't been expected, on Twitter, stating Brazil and Argentina have been presiding over a massive devaluation of their currencies, which is not good for our farmers. This is what our president wrote. Therefore, effective immediately, I will restore the tariffs on all steel and aluminum that is shipped into the US from those countries. This is what Mr. Trump wrote a little bit earlier today. And of course, as we can see, a pretty negative reaction of the US indices, and of course the global indices. On the other side, Brazilian President Jair Bolsonaro said he would discuss Mr. Trump's measure with Economy Minister Paulo Guedes and reach out to the American president if necessary. I have an open channel of communication with Trump, he said to reporters earlier today. That's pretty interesting situation. On the other side, as we very well know, Trump also will increase tariffs on China if Washington and Beijing cannot reach a trade agreement in the very near future. As we can see, major stories this evening, but in order to comment each and every one of them, let me bring to the show my first guest this evening, Robert Barron, President Delta Hedge. Good evening, Robert, and thank you for joining us.
Good evening to everybody. It's a pleasure to be here with you.
Robert, I would like to start with a very brief comment on the US indices. It's very interesting what we are seeing because we saw major rally in the last few weeks, very low VIX index, as I was saying at the very beginning of the show. On the other side, this is the first trading session for the month, and on the other side, this is the last month of the year. What can we expect from now on?
So it's what is happening is the same story in the same start of the month. If you remember the month of August, and if you remember other months like May or February, and we have declaration at the initial part of the month. Then in a couple of days, the trend or the mini trend that is going on is recovering. So we are expecting that this is not a changing in this kind of movement. We expect that we could have a more inside movement for upside in the next days. So we are just looking at that. Today is just a nice short day, and then we could have also tomorrow. But the big data that is coming out from Wednesday to Friday is going to clear out where the market is going to move. I don't think at all that the investors and mostly all the managements and this year that was particularly up could turn in the month of December. We don't have any macroeconomic view that is changing in the last 2-3 days. There is any geopolitical tension new. So I think it's just a part of the trading, and then we could stop this falling of the market in a couple of days, and then we could have another recovery. I don't know if we could have more maximum and more high in the next 2 weeks, but it's probably that we could have more highs in the next 1 month, and then we are in a last part or final part of a big upside movement that we have to remember this, because at all we have a discrepancy from the macroeconomic data and the movement of the market. Stock prices are very high, like price earning, and they are this movement is every week going up because we have low interest rates and we have a low political of the dollar view. What is the most important thing, and that different from the other months, is the changing view or something that's going to change on the US dollar. So if we're going to have an depreciation of the dollar, and we could have in this kind of more lateral side movement on the stocks market. This is the best view that we could have for the next 2-3 months. So we're going to have a dollar that's going to fall, and then we're going to have stocks markets that's going to be lateral or neutral position, and we're going to have a correction more in time than in percentage, because days like today are very good for some short, for some trading people, but not for investor. We could have a more nice movement in the market in upside, and we expect that this kind of volatility is gonna stop in the next 2-3 days.
On the other side, I shall say that President Trump is literally unpredictable, because last week actually he signed a bill backing Hong Kong producers. On the other side today, as I was saying at the very beginning of the show, he will most likely restore aluminum tariffs, steel and aluminum tariffs on Argentina and also Brazil. So once again targeting Latin America. And of course, this announcement that if any kind of trade deal between the US and China is not going to be reached in the near term, he's going to ramp up tariffs once again. So far, do you think these two major stories are going to be, how can I say, important market mover for this last month of trading session?
I don't think so. I think that the Trump announcement is just about his new campaign and what is going on, in particular with the impeachment. is more interesting see what is the kind of next move on the impeachment, and I think he's going to use this kind of tariff against Europe or against South America or whatever the new kind of assignment on China, just when there is something that is going to be wrong on the side of the election, or maybe of the impeachment, or maybe on the macroeconomic data. So, and this is a sign that he could take out like an ace in his pocket, sorry, and just in the moment that he could need that he has made the agreement. So it's just tactical. It's not something that's going to change. I don't think that stock market is going to fall because just Trump says new tariffs or whatever. It's 2 years, and particularly the last year, that the market moves on Trump and tweet. But I think in the next time, the market is going to not fall very short or going upside very high with another announcement.
Robert, on the other side, he once again blasted the Federal Reserve, and I would like to remind our viewers that in the middle of December, 11th and 12th of December, we're going to, of course, see and follow together the next and last meeting for 2019 of the Federal Reserve. Can we expect any surprises? And what about the dollar index? Today it's dropping by 0.4%. This is a major drop.
Yeah, it's a major drop, but it's not at all a sign that we could have more movement in the next 2 days. So it could be a sign that something is changed. It's weeks that we are waiting that the dollar index gonna fall. We need a big sign from this. Maybe could come from this week. I hope so. I think the dollar is gonna fall from 3 to 5% in the next 3-4 months, maybe in a less time, because we have all the conditions that could happen. So the big surprise could be on the macroeconomic data, or instead the next 10 days with the next appointment with the Fed. Then nobody are waiting for a cut on interest rates. Not in this meeting and not in the next one in the end of January. So that's going to be a surprise if we have another cut on the interest rates or another declaration from Powell that could change what is the condition of a neutral side of the market. The Fed is on the neutral side, so we're going to have expecting something from the dollar or the commodity markets. Friday we have a big shortfall on the oil. Today we have a jumping, and we have a jumping on the oil, and then jumping back on the gold, and we have a move very interesting on the interest rates. So something is gonna move, but we don't see at all a changing. We need a couple of days to see if something is changing in the market. So the dollar could be the next move.
I want to move to another major story, an extremely important moment also for the United Kingdom, as of course we're going to witness elections at the very middle of December. British Prime Minister Boris Johnson's Conservative Party has led its 7-point lead over the opposition Labour Party, according to an opinion poll by ICM for Reuters, the first to be conducted entirely after Friday's attack near London Bridge, 10 days before Britain's national election. Support for the Conservatives stood at 42%, up 1 point from ICM's last poll a week ago. The Labour Party was also up 1 point at 35%. The pro-European Union Liberal Democrats were unchanged on 13%, while the Brexit Party was down 1 point on 3%. That's very interesting because, of course, the two major candidates, of course, I'm talking about Jeremy Corbyn and Boris Johnson, have extremely different political lines and extremely different policy in terms of economics and also the Brexit. Which is the best scenario for financial markets, in your opinion?
To get a solution from all this kind of saga Brexit, and the solution is
do you mean it is then Boris Johnson, because he pledged more than once to get out UK from the EU by January the 31st. Are you saying that Boris Johnson is the best scenario?
For the UK is the best scenario, and we get an end of this Brexit. And if Boris Johnson doesn't win and win so much, we have the worst scenario, because we pull back again with everything, and we could extend this crisis to a second referendum or whatever. I don't think so. The poll at the moment lead Johnson. We have to see how many goes to the vote. That is the big question. And I think the campaign the last week could be more interesting. So from this Wednesday to all the next week, we could have the last final rush, and then we will see how many people goes to vote. That is most important, because that makes the difference and for taking outside the United Kingdom from the Europe. So I think the Brexit is going to go ahead. And with this kind of evolution, we have more clear other scenarios, including the Trump's administration. This is something that is stopping all the kind of other tactical and strategical scenarios in Europe and over Europe. So we need that the Brexit problem before the China's agreement is going to be okay and it's going to go ahead. So we will see next week.
On the other side, what about the sterling? I want to point out that this evening it's 1.2935 against the dollar, which is pretty flat, but a little bit of a drop, 0.02%. But this is also because we do see weaker dollar index in general. What are your thoughts on the sterling?
So we have a scenario that we think that the euro dollar is going to be up more than 1.13, going to 1.15. We think the cable is going to make the same direction over 1.30 to the direction 1.35. So we think that euro sterling doesn't change so much. And this is the case in the case of the scenario that Boris Johnson is going to win. So we have to wait and see, but I don't think the cable is going to be down to less than 127.50, 128. That is going to be a great support area. And we are just building up operation to take an option to the end of January and the 1st of February, that the cable could be more than 135, 136.
That's extremely interesting. And on the other side, what do you expect from the FTSE 100? It's always been very interesting to hear different opinions. And I shall say that in particular today, in terms of European markets, it was the only one that had a minor drop by 0.8%. All the rest dropped by more than 2%, which is pretty significant.
So at the moment, we don't expect a change of what is the long side of the market, but mostly depends on the referendum. If we expect that we could have an increase in the value of the pound, we couldn't expect a more increasing on the stocks market. So with a pound increasing against the dollar, we could see a more sideways on the market or a little correction from all the upside that we have this year. So we are not very long on this market. We are just expecting a momentum of crisis and whatever, just a sideways trend.
On the other side, let's talk about Europe, because actually economic growth in the Eurozone is weak, but consumption has remained resilient, and the European Central Bank's easy policy continues to lend support. New ECB President Christine Lagarde said earlier today euro area growth remains weak. Lagarde told the European Parliament in her first hearing since taking the ECB's helm a month ago, yet consumption has held up fairly well. Labor market conditions have continued to improve, encouraging consumers to remain confident and to continue to spend. What is your opinion in general on European stock markets, because they're underperforming compared to their US peers?
So we had that strong dollar and a strong movement on the American stocks. American stocks has a very high level of price earning, And on the other side is 2 years that all the investors says, no, we have to invest in Europe because we have less price earning, we have a less condition, is more favorable. But I think that Europe could make a better year than the United States, only in one case, that we could have expanding political on the European Eurozone. So at the moment, we could have some changing of this kind of view that's coming out from German. If we have a crisis of the market coalition, and we could have something that's going to change in German, and that's going to reflect on all Europe. We have to spend more in Europe, and we have to spend more on infrastructure or whatever, and take it off from the balancing sheet of the nations. Make more debt, and this kind of condition could be only in this way to get growing Europe, because we have less GDP, less condition to favor an increase in the next months. So in this kind of view, we could have a more increase in the euro and a more increase in the stocks, so could have a very interesting year for the eurozone. Otherwise, we could have only a balancing on the euro side, and the stocks markets is going to be at the same or very near the condition of the US markets. So foreseeing decoupling or something that could give a more trend on the Europe, we need a more expenditure from the government. Just like we saw 2 years ago with the Trump administration, with the fiscal reform. In that case, we have a more impact on the stocks market. So for have this impact, we have to see something's going to change in the political view. And maybe this is going to happen because the new commission of Eurozone that is coming out just in these days, this is the first speech of the Lagarde and from the member of the commission. Then we see, after we have the council this week, we could see from this one and the next one, two councils, that is coming out something from a changing in Europe from the political side of spending. Never happened before. Now there is a condition that could do.
All right. Thank you very much, Robert Brum, President Delta Hedge. Thank you so much for joining us, and have a great beginning of the week.
And you for the month to everybody. Nice trading.
Thank you very much. Well, let's get to another major story that we're going to discuss in the second part of the show. But let me bring you a very interesting story. The European Union has opened preliminary investigations into Google and Facebook's data practices, assessing whether the two US tech companies are complying with its rules in the region. The Commission has sent out questionnaires as part of a preliminary investigation into Google's and Facebook's data practices. These investigations concern the way data is gathered, processed, used, and monetized, including for advertising purposes, said the European Commission. The spokesperson added that the preliminary investigations are ongoing. A spokesperson for Google, on the other side, told media, "We use data to make our services more useful and to show relevant advertising, and we give people controls to manage, delete, or transfer their data. We will continue to engage with the Commission and others on this important discussion for our industry." Facebook haven't made any comments on the topic so far, so it's very interesting to figure out whether these major tech giants are going to get another major hefty fines. But we're going to talk about it after the break. Welcome back to Fonti International. It's December the 2nd, last month for the year, and on the other side, first day of trading session for the last month of the year. So far, stocks are dropping, retreating from their all-time highs. S&P 500 is down by 0.7%, Dow as well, a little bit more than 0.7%, and Nasdaq Composite 1.05 in the red territory. Not a good day also for mid and small cap. Russell 2000, 0.9% in the red. If you have a look at the VIX index, finally higher, almost at a 15 level of 14.7, and we're going to be back on it. But first of all, very quick look at the major headlines. Stocks headed toward biggest decline in almost 2 months on a report that President Trump will increase tariffs on China if Washington and Beijing cannot reach a trade agreement. On the other side, Trump said he would restore tariffs on steel and aluminum imports from Brazil and Argentina, saying both nations have been devaluating their currencies. British Prime Minister Johnson's Conservative Party has held its lead over the opposition Labour Party, according to ICM opinion poll. Economic growth in the Eurozone is weak, but consumption has remained resilient, and the European Central Bank's easy policy continues to lend support. The EU has opened preliminary investigations into Google and Facebook's data practices, assessing whether the two companies are complying with its rules in the region. Very interesting and major stories for this Monday evening. We're certainly going to comment each and every one of them. But first of all, let me also show you the FANGs very quickly, because if you have a look at the tech sector, Nasdaq is the worst performer today in terms of indices, and also the FANGs are suffering pretty much this evening. Facebook 0.9% in the red, Amazon as well 1.40 in the red, Apple 0.8% in the red, and Netflix 1.66, a little bit more than 1.5% in the red territory, together with Google 1.36%. In terms of fixed income, I want to also show you very quickly the U.S. Treasuries. So far, the U.S. 10-year is yielding 1.82, the 2-year 1.61, and the U.S. 3-month 1.59. Very interesting movements also in terms of currencies. The dollar index is dropping by 0.35%, as we can see, almost 0.4%, 97.92. On the other side, euro dollar 1.10, and sterling against the dollar 1.29. As we can see, very slight decline of the sterling. Is very interesting moment, of course, for the UK. We've been talking about the elections a lot, and we're going to talk about them a little bit later on the show once again. But first of all, let me bring to the show my next guest this evening, Matthew Malley, Managing Director, Miller Tobacco. Good evening, Matt, and thank you so much for joining us.
Thanks for having me, Alice. Great to be here.
Matt, we saw once again major surprises from President Trump. He signed a deal backing the Hong Kong's protesters. On the other side, we've heard that the U.S. is going to ramp up tariffs on China if there won't be an agreement in the near future. And major surprise today, of course, he would increase aluminum and steel tariffs on Argentina and Brazil. So he's also targeting Latin America. And of course, he's complaining that they're devaluating currencies. So, of course, the major question for investors is, where are stocks heading to? Where are markets heading to? Because we do see an immediate negative reaction. But do you think what we are seeing today is a consequence of Trump's trade policies, or it doesn't have anything to do with that?
Yeah, it does have somewhat of an impact. And of course, we also had the ISM manufacturing number was weaker than expected today, too. So we had kind of a double whammy there. But I think most of that has to do with the fact that it just gave an excuse for investors to take some profits off the table, take some chips off the table, because we've had a 10% rally since mid-August. We've seen an 8% rise since just early October, and so it's the market's getting a little ahead of itself, a little overbought. So I think these people are using these new developments as kind of an excuse to take some profits. Now, I guess two things. Number one, we've already known that the manufacturing sectors have been in, probably you really could say that they've been in a recession, even though the entire economy has not been. So this is not new news. And also, this thing with President Trump, now there's no question, the fact that he's going to put tariffs back on Argentina and Brazil, that's a negative. But the threat about putting on those tariffs on December 15th, I don't think a lot of people really believe that's going to happen. If history is any guide, he's going going to, he's just with the stock market at all-time highs. He has no, or near all-time highs, has no problem using that thread. He's done it in the past. But when the really push comes to shove, when the date really comes, he usually comes out and says, "Oh, geez, we've got enough. We've made enough progress that I'm not going to introduce these new tariffs." Of course, if this whole changes, and if he does something differently than he's done several times this year, the stock market is going to go a lot lower than it is right now. This is less than a 1% move in the S&P so far. I think it'll be more than 5% decline if he did initiate those new tariffs on December 15th, because it's something that people are not expecting and the market is not pricing in at all.
And so, Matt, are you saying that possible sell-off, like the last year Christmas sell-off that we saw, is not off the table?
No, I would be surprised if we got something that serious. If we got a decline of, certainly if we got a decline of 3 to 5%, that would not be a big deal at all. It might scare a few people, especially if it got down as much as 5%, because it was happening in December just like last year. But we do have to remember that the Fed is on the complete opposite, doing the complete opposite of what it did last year. I mean, last year it was still tightening rates, and they in the middle of the month they had a meeting and tightened them one more, raised rates one more time before they changed their tune at the beginning of the new year. And this time around, even though they're probably not going to cut rates again anytime soon, they have cut them 3 times. They are involved in quantitative easing. It may be for the repo issues, but whatever it happens to be, they are providing liquidity to the system. So with the monetary situation much different than it was this time last year, I'd be surprised if we saw a really deep pullback, a deep correction. But again, with the market being overbought, it doesn't take much for it to knock it down a little bit near term.
In math, what about the VIX index? Today it's slightly higher. Were you surprised that in the last days actually we hit record low in terms of VIX index?
Yeah, I was. I mean, I just feel that given what, going into given how much we had rallied recently, given how the market had become overbought, I was surprised more people weren't buying, whether, getting involved in the VIX, buying VIX calls or whatever happened to be, to hedge themselves, because the VIX got so cheap that it allowed investors to hedge themselves very, very cheaply. And it's like, well, why would people hedge themselves at all with the market running so much? Well, if you only have to invest for 1 month, the last month of the year, you can go way out of the market. It would be very, very, very inexpensive to do so. So I was surprised that people weren't doing that more. And as you can see, what's happening today, the big jump in the VIX, because people are suddenly saying, oh my gosh, maybe I should do something just to protect myself for the last 4 weeks of the year.
And also, can we expect important movements of the market, since, it's the last month of the year also. It's the first day of trading session, the first trading session for December, but still it's the last month of the year. So probably traders or retail investors who made some money, they're not going to risk the money at the end of the year. So can we expect major movements, or we would see most likely very calm markets and low volumes?
I think it'll be the latter. I think we see more low volume, kind of quiet. I do think we'll get a little bit of a pullback here. That will not be. That might, again, like I said, it might scare a few people, but I don't think it's going to be the kind of major sell-off we saw last year. And at the same time, just people I think they feel good about next year right now. That next year's the election year. That's usually a good year for the stock market. So I don't think, even though people will certainly take some, may take a few profits here and there, I don't think they're going to dump stocks in a major way. But again, having said that, we do have to worry about some unforeseen circumstance, some big surprise. If we did, President Trump did introduce those tariffs on December 15th, that would be a major surprise and would definitely cause a major pickup in the tariffs, and major pickup in volatility, and create a lot of excitement the last couple of weeks of the year. But unless we get something like that, I think things are going to calm down, drift a little bit lower in the next couple of weeks, and then try to drift a little bit higher towards the end of the month.
Matt, I was just talking about extremely interesting story that the European Union has opened preliminary investigations into Google and Facebook's data practices, assessing whether the 2 US tech firms are complying with its rules in the region. Can we expect, once again, hefty fines for the tech giants, or you don't think this is a likely scenario?
And something I've been concerned about for a while is what will happen over certainly the next 6 months or really the next year. And mostly I've been worried about what goes on in the U.S. because it is a bipartisan issue for people on both sides of the political spectrum here in the U.S. To worry about these things, and it's politically people don't like what these companies have done with the data that they have, and Europe I think is trying to take advantage of it. It's like, hey, let's take this time now to go after these guys because we're not going to get pushback from the United States. If anything, they're going to help us out. So I do think that we'll get some further fines. Certainly, at the very least, we'll get more threats of fines, and it's not going to go away anytime soon. This is not one of these issues that's going to be bubble up for a short period of time and then disappear completely. It'll bubble up and cool off every once in a while, but I think as we move through the year and into the new year, you're going to see it bubble up more often and in a more severe fashion. And so this is a group that's going to. I just think there's other areas in the technology area that people should be looking at, and we've already seen the underperformance of some of these FANG stocks this year, and that should, I think, continue next year.
Matt, let's talk about probably the two major events of Friday and Monday. Of course, on Friday we saw Black Friday, and this is Cyber Monday. So far, of course, estimates regarding Cyber Monday are at least 9.4 billion of income. And of course, consumer spending, that's for sure. It's been so far extremely successful. Black Friday and also Thanksgiving, $11.6 billion. This is a major record, of course, compared to the last year. And of course, the retail stocks have been in the limelight in the last few days. First of all, what is this saying? I mean, these figures like $11.6 billion of consumer spending, what are they saying for the U.S. consumer? And secondly, what is your outlook for the retail stocks? Because we do see major pivot from, how can I say, traditional shopping to click shopping, let's say e-commerce.
Right. Yeah, there's a big change. It's funny because one of the big things that helps this year, because Thanksgiving is coming so late, it's the latest it could possibly come. That leaves fewer shopping days between Thanksgiving and Christmas, and we're being hit by some severe weather here in the Northeast on Cyber Monday. But of course, that doesn't matter. People aren't. It's Cyber Monday. It's called Cyber Monday for a reason, because people can sit at home and click on their computers and get their stuff done. They don't have to worry about going out to the malls or the stores. So that certainly helps, and it's going to be important. I do think because so many people can do so much more in terms of online shopping that we'll probably need a little bit more time to get a better feeling for how the consumers are doing. But so far, it's been good. If they had been weak, I would have been less worried, because that the people know that they can get this stuff done, and they know that they can get stuff delivered a lot better than they used to be able to do. But right now, things look pretty good. It's one thing we still have to be a little concerned about, but and of course, what we saw last year is that the stock market, when it did fall deeply in December, the consumer did pull in their horns rather quickly. Again, I don't think we're going to see a deep correction in the stock market, but keep an eye on the stock market. If it does seem a correction, it could throw a little bit of a wrench in the works. But so far, things look pretty good.
And what about the retail stocks? Are you bullish on them? For instance, I just want to show to our viewers that this evening they're not performing pretty well. In particular, Target is down by a little bit more than 0.5%, Walmart 0.8% in the red, and Home Depot down by 1.40%. And on the other side, Kohl's is up by 0.13%, and Macy's as well, 0.9%. We did see that, for instance, Walmart invested a lot in terms of e-commerce, and also, I mean, in order to, how can I say, provide better e-commerce services for its consumers. It's not the only one. Also, Target and many more did so. Are you bullish on the retail stocks in general, or they're not? How can I say, they're not at your range of interest?
No, they concern me. I mean, obviously, you want to go to the ones that have done an excellent job of on the online retail side and getting involved with electronic retail. And of course, Walmart's been very good at that. The stock, because it's been good at it, it's acted particularly well over the last couple of years compared to a lot of other retailers. And so it's not a surprise that every once in a while it will underperform a little bit because it's run so much. And this, of course, we've seen this situation with Home Depot where they've underperformed recently because of they've had some fits and starts with their newest program getting into the online sales. But Home Depot is a very well managed company. They're going to solve this issue, and as long as the housing market continues to hold up, that should act very well. But some of the more traditional retailers, I mean, yes, Macy's is trying to bounce back a little bit, but it's underperformed so badly that when it sees a bounce like this, it's not something. I think it's more of a technical thing than a real long-term bullish situation. So you definitely have to be much more discriminating here in individual stocks rather than just buying the whole group. There's just such a divergence between who's doing a good job of making the shift towards e-commerce and the ones who are not.
Exactly, that's the key word. The last statement you made, the last sentence you've said. So which are your picks in terms of retail stocks if we had to choose, let's say, a few of them?
Well, I would. The two I just mentioned would be Walmart and Home Depot. Walmart is one, of course. It's a more traditional one. You're gonna, in other words, it's had a nice run. They've done very, very well for many years, many decades. So it's not necessarily the sexiest one that you're gonna triple your money in a year. But it's still a great stock and a great company. The other is the Home Depot is one, of course, has been underperforming quite badly recently. It's getting oversold. But again, if you're looking at what they've been able to do over time, you just see that, and the issue that we have there is the housing industry. It still seems to be holding up. Interest rates might creep up a little bit higher here, but I don't think they're going to skyrocket. So as long as the housing industry holds up, and you get, I think Home Depot will be able to figure out their individual issues involved there, and they'll do very, very well.
And where is Amazon in this story? Or you don't put it, how can I say, in the retail sector, you would rather put it in the FANGs?
Well, no, it's definitely important for the retailer and important for the consumer. The one thing we do have to worry about, though, not worry about, but we need to distinguish, if you want to see about distinguish between the stock and the company. The company is still doing incredibly well, and we want to see what their revenues are. If their revenues are still remain strong, we know that the consumer is still strong. If their revenues start to come down, that'll be a major red flag for the U.S. consumer. The problem is that because they have decided to ramp up their spending and investment in their own business, that's going to hurt their earnings. For a lot of companies, you say that's not a good thing. You want to sell the stock and get out of it. It doesn't matter if it helps them long term. But the thing is, Amazon's been so good at doing that. They've proven that every time they invest, yes, the stock doesn't do much for a while, but doesn't go down much. And then when they come out of that spending spree, that investments they've made tend to be very profitable, and the stock rallies again. So right now, I'm not all that bullish on the stock of Amazon because I just think the amount of money that they're spending is going to keep their profits down. That's okay on a very long-term basis. I understand why people want to hold up because they'll spend. It won't be just a couple of weeks or months. They'll do it for an extended period of time. So it's not a stock I would chase, but it doesn't mean it's suddenly a bad company or that the company's having some problems. But it does say that it may not be the best retailer right now that you want to go chasing.
Certainly extremely interesting, the retail sector, I shall say it is, and Amazon is certainly a major stock, a little bit expensive though, but of course a very stable performance, as you said. Let me just point out that if we have a look at the US consumer, we can say he's in a great shape, but we cannot say the same for the manufacturing sector because manufacturing activity continued to lag in November amid a decline in inventories and new orders, according to the latest ISM manufacturing reading released earlier today. The reading came in at 48.1 versus an expectations of 49.4 and the previous month's rating of 48.3. Matt, is there something to be concerned about?
Well, I think there is because we finally got a little bit of a bounce in October, but that didn't last, obviously, because we just got the new numbers today for November, and they were disappointing. And I guess the thing is that this number is coming out on the same day that we're getting news of potentially more tariffs. Now, we are getting more tariffs, it looks like, in South America. That causes problems for global growth and for manufacturing. And also I think this whole thing with China, even though I do not think that the president will institute these tariffs in December, I think what it shows is that this tariff thing or threats of tariffs are going to be with us in the new year. Even if they sign a phase 1 deal, it'll still be involved with phase 2, phase 3, etc. And it's not going to, a lot of people are saying, geez, if we can just get these tariffs out of the way and get this deal signed, boy, manufacturing is just going to take off. My view is that it's going to be such a small deal that the tariff issue will not disappear. It'll still be out there, maybe not to the same degree, probably not to the same degree, but it'll still be out there. And so it's just a reminder that people looking for a big bounce back in manufacturing next year are probably going to be disappointed, and therefore it creates headwinds for that sector.
And on the other side, as you mentioned, actually we saw extremely good second reading of the third quarter GDP at 2.1%. This is great figure compared to what we're seeing here in Europe. So, how do you explain these differences?
Well, Europe has been obviously had their problems. Have been more severe problems in the last 2 years, I would guess, really since the beginning of 2018, so. The thing is, though, with the U.S., the 2.1% is a lot better than we had been seeing, but it's still not the big numbers that people would like to see. You definitely want to see above 3% growth before you can really say that things are really taking off. But the one thing we really want to look at, I like to look at as we move into next year, if the market continues to rally a little bit, which market is lagging behind the other? Both the U.S. and the European markets are making all-time highs. But the all-time highs in Europe are their 2015 highs, where the U.S. market's almost 50% above its 2015 highs. So I think you got a little bit more upside in Europe, because if things are bottoming, that's a big if. But if things are stabilizing around the globe, European economy would have more upside. But we do have to, there's obviously a lot of issues still to worry about. But I just remember 2 years ago at this time, everybody was talking about how Europe was the place to be, and it turned out to be the worst place to be in 2018 and for much of 2019. And now everybody's saying that Europe is, you should avoid Europe at all costs. And I wonder if we're going to get the opposite reaction as we move into next year and see a much better year than people have been expecting.
And what are you saying? Should we avoid Europe in all costs?
No, I don't. The one thing I want to watch very carefully is European banks. They are showing some signs, finally, of breaking out. And there's been a lot of concern about this sector. It's lagged very, very badly. Not just lagged, but it's been gone down for a couple of years now. It's one thing to lag on the way up, but when you're going down when everything else is going up, that's a concern. So I'm watching those very closely. If the bank stocks can continue to rally, that's going to be very bullish for the European markets. If they roll back over, then it's a situation we have to worry about. And I'm not convinced that the European banks are out of the woods, especially with the situation going on with Deutsche Bank. But if those things start to bounce back, and we hear better news out of the European banks, well, that's when you really want to jump in.
All right, thank you very much, Matthew Malley, Managing Director at Miller Tabak. Thank you so much for joining us.
Thank you. Have a great one.
You do. Have a great beginning of December.
Thank you.
Well, let's get to another major story this evening, and it's regarding the automotive sector, in particular Nissan, which is up this evening at the New York Stock Exchange 0.4%. Nissan Motors' new chief executive Makoto Uchida said the troubled automaker's fortunes deepen on its alliance with partners Renault and Mitsubishi Motors, and he called for closer cooperation among the three. The alliance is essential to our performance recovery and steadfast growth in the future, said Mr. Uchida at a news conference on his second day on the job. Nissan last month cut its forecast for operating profit in the year ending March 2020 company by more than a third, the latest in a series of profits and sales downgrades. The alliance is working on a leadership overhaul that would beef up oversight of the company's product plans. Such efforts have met resistance previously from some at Nissan, who wanted to preserve their freedom to develop their own products. As we can see, probably more consolidation in the sector is coming up. We are certainly going to follow the events. We're heading for a very short commercial break, but stick around, because in the next part of the show, we're going to talk about possible scenarios after the OPEC meeting. Welcome back to Fonti International. This is our third part of the show where we're going to focus on the energy sector. There is a lot to talk about, but first of all, very quick look at the U.S. indices. As we can see, all of them are retreating from their all-time record highs this evening. S&P 500, 3,118 points, down by 0.70%. Dow as well, 0.7% in red territory, and Nasdaq Composite a little bit more than 1% in the red. Together with Russell 2000, as we can see, not a good day, not a good start of December also for Russell 2000. But still, guys, I mean, those are great figures, the one that we're seeing over there on the board. On the other side, I want to point out that this evening the VIX index is slightly higher at the 14.2 level, and it's of course Cyber Monday, so we're expecting very huge consumer spending. Certainly, one of the reasons for this major decline is, of course, the Trump's tariffs gambit together with Latin America and also China. That's for sure. Another reason is also the U.S. ISM manufacturing sector, because the figures were a little bit of disappointing. We're certainly going to comment all those scenarios, but first of all, very quick look at the major headlines. Stocks are heading towards biggest decline in almost 2 months on a report that President Trump will increase tariffs on China if Washington and Beijing cannot reach a trade agreement. President Trump also said he would restore tariffs on steel and aluminum imports from Brazil and Argentina, saying both nations have been devaluing their currencies. British Prime Minister Johnson's Conservative Party has led its lead over the opposition Labour Party, according to ICM opinion poll. Economic growth in the Eurozone is weak, but consumption has remained resilient, and the European Central Bank easy policy will continue. This is what Christine Lagarde said today. The EU has opened preliminary investigations into Google and Facebook's data practices, assessing whether the companies are complying with its rules in the region. As you can see, major stories for this Monday evening, December the 2nd, and a first trading session for December, last month of trading for 2019. Certainly, we're going to observe it extremely carefully, because it's extremely interesting also the levels that we're seeing over there for the US indices. Let me have a very quick look at the oil price so far. WTI is trading $58.83 per barrel today. It's up by 1.10%, and the Brent $60.94. And actually, talking about a Brent, I want to bring you a major story coming from the Wall Street Journal regarding exactly the Brent benchmark, the world's most famous oil and gas field, and the backbone of global crude pricing has dried up. Soon the Brent benchmark will have no Brent oil. That's pretty interesting. World that Shell is expected next year to plug the last remaining Brent oil wells located in the North Sea East Shetland Basin, about 115 miles northeast of Scotland's Shetland Islands. The closures mark the end of an era as the industry shift is focused to smaller oil finds near existing infrastructure. So this means that most likely there is not going to be Brent oil benchmark, which is, I mean, a major story, and it's going to be also major shock for the energy market. But in order to delve deeper into this story, let me bring to the show my next guest this evening, Jean Erga, Chief Economist, Tigers Financial Partners. Good evening, Jean, and thank you for joining us.
Good evening, Alexandra. Thank you. It's always a great honor and a great pleasure. Thank you.
I mean, Jean, I was reporting a story of the Wall Street Journal. Do you think this is possible?
What, that we're going to be left without a benchmark? I think it is possible. I think the markets will find another one, quite frankly. I think it is not so much do we have the benchmark, it is what is its replacement. I think this is basically what we're going to be looking at. I think the real point is basically what is happening in the oil market and where is the oil market headed. We're seeing all kinds of rumors swirling around. We're seeing all kinds of reports about the OPEC conference. We're seeing the shale producers in the U.S. who really are blasting away and are exporting their oil to Europe and putting the OPEC partners in a squeeze. I think these are the big stories that are coming up now. And I think it's a very tense moment in the oil market, quite frankly.
Absolutely, and it's extremely important moment actually for the market, because we're ahead of the OPEC meeting. We're going to report, of course, on Friday. That's for sure. Fonti always follows these events. So far, what is certain is that Saudi Arabia is going to push for extension of oil production cuts. through mid 2020. And this is because, of course, we're going to witness by the end of 2019 the IPO of Saudi Aramco, the long-awaited IPO of Saudi Aramco. So they're certainly interested in higher oil prices. In your opinion, which are the most likely scenarios?
My opinion is going to be this. They're going to come to some sort of general understanding on production cuts. They will be framed fairly loosely so as not to put excessive constraints. I think that, quite frankly, I saw this one coming. I mean, the Aramco IPO is a complete sort of non-event. And if they have to resort to this mechanism of having to enroll other countries in propping up the IPO of their flagship sort of revenue provider, I think it's a very bad sign for the market. I think they're sending a signal to the market which says, look, without, in fact, further squeeze on supplies, oil is not a viable, let us put it this way, stock market investment. Look at all the trouble they've had already. They've had to bring down the valuation. They've had to add sweeteners. They've had to increase the prospective dividend yield. They've had to offer people in their bonus if you don't sell your stocks before 6 months. And now that's still not enough. And now they have to go and further squeeze production. If I were an investor on a large scale in energy, I would certainly be having second thoughts, and I was probably running to invest in a US MLP, with much less political risk. I think it's a very bad sign for the market, quite frankly. With everything they've done, the price is where it is. That is amazing.
So are we witnessing a crisis of the energy market?
I don't know if it's a crisis, but I certainly think it's a failure of conventional methods to prop up the price. I mean, let's put it quite simply. I mean, here you are, we're talking about green shoots of the economy. I know some see them. I'm very short-sighted even with my glasses, so maybe I missed it. They're talking about stabilization in certain sectors. We did not see it this morning on ISM manufacturing in the US. Well, these should all be good things. And we see that in China, for example, one of the indices of factory industrial production was really not too bad. And still, they still have to go out and further cut production. I think that's very strange. This is not working. The free market mechanisms, which usually prop up the oil price, are simply absent and missing in action here. And I think it's rather serious, quite frankly.
You know, Jean, what is very interesting for our viewers, certainly they're retail investors, lots of them are retail investors. Can we imagine oil price below $50 within 2019? And we have 1 month till the end of 2019.
Oh, yes, absolutely. I mean, I think, the oil price is going to trade in a range, and I think that range progressively over time has gotten tighter. Let us remember that we had these production cuts on at OPEC Plus, OPEC and friends, and we were around the 51, 52. I think it could easily go below 50 if we have a bust, for example, on the US-China situation, where Trump or the Chinese say, well, you know what, this is where we stop, we really can't figure out our differences. I can easily see it going below 50, even with these incremental production cuts, yes. But I think the real point is basically this. The real point is, how has this sector performed? It has not performed particularly well. How is the big flagship privatization going? Absolutely miserably. I've never seen an IPO have so much trouble in my life and be so mispriced by so-called experts. So I think it should be some sort of warning sign that you have to be very selective where you invest in this sector, because not all of them are created equal, quite frankly. Oh yes, I think I could see a 49, 48, WTI. I could see a sort of sharp move down on bad news on China, for example, were to come.
And on the other side, of course, actually in 2019, the US is one of the major exporters, which is very interesting. I mean, this is certainly a milestone for the United States. Are we going to see the United States as a major actor from now on in terms of energy sector?
Oh, absolutely. And we welcome it here. I mean, quite frankly, I think it's an excellent thing. I think it's absolutely excellent that the U.S., A, can export, because it's a source of foreign revenue and we improve our balance of payments position. B, it gives us much greater flexibility politically. We can be much more even-handed in our dealings, for example, in the Middle East. We no longer have this symbiotic relationship with these countries, which may push some of them to reform, maybe. 3, we are in a situation where we are not only exporting, but we are actually supplying internally. So it's not that we're starving the local industry, let us put it this way, of energy, and at the same time we're diversifying our energy sources internally. So I think it's a very good position to be in, and I think that these countries are now having to wake up to the fact that the US is not simply a customer, the US is a competitor, And a large part of the fact that the prices have been under pressure is because we are able to compete with them with our very high quality light shale oils in markets where they were previously dominant. Remember, there's also a question of what type of oil you're actually looking at. The U.S. refineries are primarily built to refine the heavy, let's put it, lower grade oils, and we are exporting the light shale crude, which, however, is of a much higher quality and goes at a premium. So I think it's a very good situation all around for the U.S., and I think any incoming U.S. administration should do absolutely nothing to stop this.
Jean, absolutely. I shall say that U.S. shale oil output has routinely defied naysayers. Over the past 3 years, as actually U.S. production has surged to nearly 30 million barrels per day. This is complete record, as I said, milestone. Can we expect U.S. to be part of the OPEC members, or we rather can expect that the OPEC organization is going to be, how can I say, more and more irrelevant in the future?
I think it's going to become. I think it's irrelevant now, quite frankly. I'll put it to you very bluntly. If you take out the Russians, these people are absolutely nowhere. I mean, they just cannot get off the start position. The only thing that's propping this thing up is the Russians, and that's the end of it. Were it simply the original OPEC members, I think the prices would probably be somewhere around the 35, maybe 45 area, and that's that. Now, there's another very big problem which says, well, let's say we manage to push through even bigger cuts, say the OPEC plus members. Well, what's going to happen then? As you very rightly point out, Alexandra, the shale producers in this country are not asleep. They will say, you know what, the price has gone up, I'm going to produce even more. And then they're under no restrictions, and they simply go and engage in what is known as the free riding phenomenon, where somebody else pays for you and you make the money. That's it. Who is going to pay? Those who have cut their production and have falling cash flow, in the hope that tomorrow price will be higher. So they sacrifice cash flow today for price tomorrow. It may not work. But in the meantime, you have somebody who is under no such constraints and can produce as much as they want. So you are suffering so that they can make money. And they don't want this. That's why you're going to be seeing most probably some reluctance among some of the players in the OPEC Plus group to go along with this. All we will do is generate an incremental production from shale oil in the US, which will knock us flat.
On the other side, Jean, I would like to talk about the U.S. ISM manufacturing figures that we saw today. They were a little bit they were a little bit disappointing since the decline was major compared to what were expectations. In your opinion, is there something to be worried about after we saw the second reading of the third quarter US GDP hitting 2.1%?
Well, look, I think it's very simple. It's what we always said. This is an economy which is steaming along. I don't think it's steaming along at 10% growth rates a year. This is not China in the early 2000s. However, I mean, it rests on one leg only, and this leg is the consumer. Now, everybody is looking at Cyber Monday. Everybody's looking at how much did they sell over the last weekend. Well, the point is basically this. I mean, as long as the consumer hangs in there, and the consumer at this point has a fair amount of money, savings rates are relatively high, the consumers are actually reducing their debt load in the aggregate. Maybe not all of them. Most of the situation is okay for now. It can turn on a pin. It can turn very quickly consumer sentiment, and you can see a cessation of buying in the U.S. if people get very scared. What is the link to manufacturing? I think the link to manufacturing, that manufacturing is capital investment and is the long game. And over time, this does seep through. So if we continue to have bad data on manufacturing, the longer we have bad data on manufacturing, the more risky it gets. Some people here say, oh, but you really have to look at it on a regional basis because some places are doing well. But the aggregate number is what it is, and it's showing us contraction. So I would be cautious here, quite frankly. I don't see a healthy economy as an economy which is resting on just one leg. You need both. And then they say it's a question of trade, but we haven't solved the trade problem. So there it is. I mean, it's only a question of trade. But look, what if we don't solve the trade problem? Then what happens? Then do people even, let's say, invest even less, and does the contraction become worse? And where is the trigger point? Because the real problem is in these things, the trigger point, when it comes, it is a step function leap downwards, generally, jump. And it's not gradual. And then you really see the impact, and it hits very hard.
I just wanted to point out for our viewers, actually, the U.S. ISM manufacturing reading came in at 48.1 versus 49.4. That was the expectation. So we do see a big difference. On the other side, you've just mentioned the trade. Certainly today, the trade stories that we saw coming from the US have been major market mover. So how do you think this story is going to end up? First with Latin America, I'm talking about Argentina and Brazil, steel and aluminum tariffs, and on the other side, this announcement that if Beijing and Washington are not going to find an agreement in the near future, Trump and the United States, of course, are going to ramp up Chinese tariffs.
Well, look, first of all, I think let's start from the big one, the U.S.-China discussion. I think these are two people talking and neither seems to be listening to the other, quite frankly. I don't even know if it's a dialogue. I think it's two people speaking across or, sort of through each other, so to speak, by each other. I think it's going to end up most probably with some more bickering, and then there could be some intention of saying, well, let's see if we can work something out in the new year. And that's basically that. The agreement, let us put it this way, perspective as it stands today, is extremely limited and will probably not go much beyond these agricultural purchases and maybe, let's put it this way, some mention of some other themes, but no solution to them. So you have to distinguish between a mention and a solution. As far as the agriculture is concerned, there could be a solution. As concerns the other themes, which are much more important, there will be a mention and an agreement to discuss them further. So trade agreement or no trade agreement, I think it shall make very little difference to the overall, let us put it this way, aggregate global economic picture. Because even if they sign this agreement, I do not see people rushing out and building factories and investing. I think the problems in the world are there whether there is this trade agreement or not. As regards the Latin American situation, I would not get overly worried about it. I mean, what does worry me is politically is that we are hitting out at Brazil, which is a regime or a government which is extremely friendly to us and whose leader has expressed friendship for Trump. I do not believe the story that there is currency manipulation. These are two countries that have come under a lot of economic pressure and quite frankly, I mean, they have even intervened to prop up their currencies on several occasions. The Argentines, must be said, spent a good deal of their foreign exchange reserves until unfortunately they had practically none left to prop up their currency. They raised interest rates. They could have let the currency drop even further. They did not. They are hit by an internal political crisis. The Brazilians have been struggling now for some years. Things are difficult. They are now slowly coming out of recession, but growth is still low. There are still difficulties with some parts of the reform program. So I do not believe we can accuse them of currency manipulation either. I think the Trump administration must learn to distinguish between countries that are under targets or under crisis situations and countries which are not in crisis situations, such as China, which are using the foreign exchange rate politically and at the whim of bureaucrats.
And Jean, I was wondering, do you think what we are seeing today on the markets, this, how can I say, retreating of the stocks of their all-time record highs that we saw in the last 2-3 weeks, actually still great figures, I should point out, but still, all the major averages are in the red territory by at least 0.7%. Do you think this is because of Trump's tariffs and trade policies, or it's rather, how can I say, a normal reaction after these major records?
I think the market is looking for an excuse to sell, quite frankly. I mean, I'm not a great trader, but I can assure you when things go up that fast, at some point somebody's going to say, well, look, I'm getting out. I've made my money. Remember, we're moving into the year end here. And there are a number of people who start thinking, well, I did reasonably well this year. Trump has started once again with his tweets about trade. Then we have the situation in Latin America. Then we have that situation. You know what? I'm going to start taking some money off the table. I mean, I don't think the clients have been particularly dramatic. I think there could be a further pullback here. I think people remain relatively optimistic, even though we're looking at an economy which is off axis and one is aware of the problems. I think the real problem will be the event leverage. I mean, is this just a first step towards some more disillusionment, let's put it this way, on the US-China front? If it is, then things could get much rougher. Right now, I think the market needs to sell off 3-4% most probably, simply to reestablish, sort of the flow of funds here. People are riding a liquidity wave, they're acting tactically, and they have yet to start thinking strategically. We believe the real market will kick off again with the new year when the last flood, let us put it this way, of make your numbers for the year has finished, and people shall be forced to confront one way or the other the real economic situation under which companies and governments all over the world shall be laboring.
Jean, let me ask you also, what are your expectations of the Federal Reserve's last meeting for December? I believe it's going to happen on 11th and the 12th of December. Trump blasted them once again after, I believe 2 weeks ago, there was a friendly meeting between the Fed's chair, Jerome Powell, and President Trump. So it looked like there would be there is at least a trial from Trump's point of view to establish a friendly relationship with a Fed chair. Do you believe any surprises for the Federal Reserve or rather not?
No, I don't think there'll be any surprise. I think they're going to be very careful. They're certainly not going to raise rates. That they shall not do. I do not believe they will cut them. I think all the representations hitherto are that monetary policy is appropriate for the situation we're in. The U.S. economy is basically okay. I think that's basically what they're saying, and they'll keep monitoring it. I think they'll be looking from point of view of action. Therefore, I think there will be no action. I'll be looking, for example, at the language, how they deem the U.S. economy to have, let's say, advanced or worsened in the time since their last meeting. Are they granting more importance to the manufacturing issue? Are they starting to see pass-through? Remember, we're also going to be seeing, by that point, we will have seen the British elections, to what extent were the forecasts borne out, to what extent were they not, what actually happened in Britain, how is that going to impact in any way on stability within the Eurozone or European Union, so on and so forth. I think they're going to want to leave things, well enough alone, quite frankly. I think their politics is called cease and desist, and secondly, their let's put it this way, dominant strategy is do no harm. And I think they will be very careful what they do, because last year they acted and we saw what happened. I was here on Christmas Eve, and I can assure you I walked out of the streets of New York into Madison Avenue and Park Avenue, and people were practically weeping. So I think they want to avoid that. And then there was a contraction, especially in consumption, which was brought on by the fallen stock market. They are very conscious of the fact that a large part of consumption, which is driving the U.S. economy today, is linked to the markets much greater than in the past.
And on the other side, what about the inflation target? We are certainly going to look for hints also from the ECB, because there were some different stories that Christine Lagarde and her board, of course, of directors might, how can I say, change their inflation targets. What about the Federal Reserve? Do you believe they're going to leave inflation higher than 2%?
No, I think they're going to keep it exactly where it is. I think that'll be the official target. They will say, around that rate, so to speak. They will accept an overshoot. Remember, we're in a situation here in the U.S. where we have the dual mandate. We have, on the one hand, the price stability, and we also have the employment, the growth factor, which is very important. And so therefore, what is Powell seeing now? Powell is seeing that something very important is happening in the United States, is that for many years we had this labor force, or part of the labor force potential, which was deemed to be outside of the conventional labor force, and that these people were not employable, that they were on the margin and they would stay there. Now it seems that these people are fully employable, are not on the margin, and are coming back into the economy. Now, whose merit this is, we shall never know, quite frankly. But Powell said this is very important socially, could actually diffuse some social tensions, and could create a broader consumption base going forward. So now I think they will not do anything which could prejudice this by raising, for example, the cost of financing for smaller, mid-sized companies, which are actually the ones that are labor intensive and which are hiring. So I think that, in fact, no, they will leave it where it is. They're not going to clamp down. They're not going to be inflation hawks. Remember, there was the Black Friday and the whole weekend thing, and there was some very, very heavy discounting. This is how they're boosting the sales. Maybe the discounting was even bigger than previous occasions. So I think they're going to be very careful.
Absolutely. Major new records for the Black Friday, also Thanksgiving Day, and most likely Cyber Monday. Jean, let me ask you a very last question. The dollar index today is dropping by more than 0.4%. Why is that, in your opinion?
Well, it's simply the fact that people look at, let's say, the ISM manufacturing and say, you know what, maybe the U.S. economy is not as strong as we think it is. Maybe, in fact, it's starting to slowly recede. This is the first sign of a possible recession in the U.S. I think this is basically it. I think it's a noise. I do not believe this is a signal. If you actually look at the absolute where the dollar rate is, we're still trading below 1.11 on the euro. We're nowhere near the 160, the 140, the 150, the 135 levels, and we're getting close to the end of the year. According to many of the great experts and geniuses, we should have been at 125 at this point. We are nowhere near it. So I think that this is a bit of noise, some adjustment of positions, mild. I believe that unless we really have a blowout in the US on the economy in some way, very, very serious, I do not see it going much higher than this, the euro.
All right, thank you very much. Energas, Chief Economist, Tigers Financial Partners, thank you for joining us.
Always a great pleasure, always a great honor. Thank you.
Thank you, Jan, and have a great day. That was the last story for this evening. Thanks so much for watching, guys. See you tomorrow exactly at 6:45. And let me tell you, up next is the UN briefing on global warming and also climate change.
All right, good afternoon. Today in Berlin, in Germany, the Secretary General called on member states, companies, technology experts, and civil society to join forces and explore the possibility of a global commitment on digital trust and security. Speaking alongside German Chancellor Angela Merkel at the opening of the Internet Governance Forum, the Secretary General also announced that he will soon appoint a technology envoy to help advance international frameworks and nurture a shared digital future that puts people first and helps bridge the social divide. Immediately after the event, the Secretary General had a bilateral meeting with Angela Merkel. In remarks to the press, he said that digital technology is shaping history and reiterates that we have a collective responsibility to maximize its benefits while managing risk and avoiding unintended consequences. He also said that we need smart regulatory frameworks and that he was pleased that Europe is leading the way. Turning to the climate crisis, the Secretary General mentioned the two reports published this week that bring more evidence that we are currently not winning the race for our lives against the climate crisis. Throughout the day, the Secretary General met with several other German officials, including the President and Minister of Defense and Minister of Foreign Affairs. And as you saw last night, the Secretary General said he had hosted an informal dinner with the leader of the Greek Cypriot community and the leader of the Turkish Cypriot community. That statement was issued to you yesterday. And as mentioned on the climate reports, ahead of the start of the next UN climate change conference in Madrid, a new report by the UN Environment Programme warns that global emissions must be slashed by 7.6% every year for the next decade to meet the Paris Agreement target of 1.5 degrees temperature rise. With the current unconditional commitments made under the Paris Agreement, this year's annual emissions gap report cautions that global temperatures are expected to rise by 3.2 degrees centigrade. The Intergovernmental Panel on Climate Change has cautioned that going beyond 1.5 degrees will increase the frequency and intensity of climate impacts. The Secretary General stressed that there's never been a more important time to listen to the science, adding that failing to heed these warnings and take drastic action to reverse emissions means we will continue to witness deadly, catastrophic heat waves, storms, and pollutions. In a tweet, he underscored that we need more ambitious climate action from every country, city, business, and individual to protect our future. The full report is online. And after the Secretary, just on the Congo, to let you know, the Secretary General Special Representative for the Democratic Republic of the Congo, Leila Zerugi, will brief the Security Council via VTC in close consultations regarding the situation in Beni, in the country's east. We've arranged for her to speak to you at 2 p.m. Via video conference in this room. Also on the DRC, the World Health Organization said that although recent violence in Beni was not directed against the Ebola response team, WHO has decided to relocate 49 of its 120 staff from Beni to Goma. WHO had previously been able to trace more than 90% of the contacts, but now that figure stands only at 17%. 7 new cases have been reported in the past week. Overall, as of November 24th, there's been 3,303 cases, of which 2,199 had resulted in death of the patient, 1,077 have survived, while others are still receiving treatment. And turning to Yemen, the head of the UN mission to support the Hudaydah Agreement, Lieutenant General Guha, is deeply concerned about the escalation of violence witnessed in the last few days in Yemen's Hudaydah Governorate and its surroundings. The increase in number of airstrikes undertaken in the last 72 hours is in stark contrast to the relative calm after the establishment of the observation posts. The Lieutenant General is alarmed by the reported loss of life and the suffering among the Yemeni people caused by such attacks, noting that they jeopardize the safety of members and Redeployment Coordination Committee, the body responsible for monitoring the ceasefire. He urges all parties to refrain from any action that may be in contravention to the terms and the spirit of the Stockholm Agreement and avoid further escalation of the situation. He further urges the use of the de-escalation mechanism established with the support of the UN mission to resolve differences and support ongoing efforts to maintain the ceasefire in Hudaydah. As part of her continued efforts in the search for political solution for Iraq's crisis, the Secretary General Special Representative for Iraq, Janine Hennish-Plasschaert, has held separate meetings with the President of Iraq, the Prime Minister, and the Speaker of the Council of Representatives. She stressed the need to reflect the people's legitimate call for electoral reforms and the legislation that is currently under review by the Council of Representatives. The Special Representative also recently visited 2 hospitals in Baghdad where she met with some of the people who have been injured during the demonstrations and also spoke with some of the healthcare workers. Back here in the Council, Karim Assad Ahmad Khan, the Special Advisor and head of the UN investigative team to promote accountability for crimes committed by Daesh, briefed the Security Council this morning. Mr. Khan told Council members that the investigative team has continued to ensure that the experience and the needs of the survivors of Daesh crimes and the families of its victims are placed at the center of its work. And he said that 1 year following the arrival in Iraq, the team is now fully operational. And the head of the UN mission in Mali, the Special Representative Mohamed Saleh Anadif, paid tribute this morning to the 13 French soldiers of Operation Barkhane who were killed in an accident between 2 helicopters during a fight against jihadists in Mali. Mr. Anadif said the French Operation Barkhane is dedicated tirelessly to keep people of Mali and the Sahel safe from terror. He said he bowed to the memory of the fallen soldiers. And just to flag that Assistant Secretary General for Humanitarian Affairs, Ursula Mueller, is starting off a 2-day visit to Morocco, where she will deliver a keynote address in Rabat at the International Humanitarian Law event on the 70th anniversary of the Geneva Conventions. That event is being co-hosted by the Kingdom of Morocco and the International Committee of the Red Cross. In Morocco, she will also meet with government officials to discuss multilateral humanitarian system and Morocco's further contributions to it. And just an update from OCHA, from Djibouti, our humanitarian colleagues tell us that heavy rains and floods have impacted more than 150,000 people, with 9 people, including 7 children, reportedly having been killed in the city of Djibouti. In support of the government-led efforts, the UN and our partners have launched an emergency needs assessment and are deploying emergency health kits, drinking water, and mosquito nets. Additional funds are needed to scale up the response. And in Kenya, more than 160,000 people have been impacted by heavy rainfall since early October, with more than 100 reportedly killed and thousands displaced due to floods and landslides. The UN offers its condolences to the families of the victims and stands ready to help the government and people of Kenya. And following earthquakes that struck this morning Albania and Bosnia-Herzegovina, I'd want just to let you know that 2 UN Disaster Assessment Coordination technical support members will be deployed to Albania, and the UN stands ready to provide any further assistance to Bosnia-Herzegovina if required. And the UN is in contact with local authorities for more information on the situation as well. And just yesterday, you saw we issued a statement on Bolivia, welcoming the positive developments over the weekend towards a peaceful and democratic solution to the crisis in the country. Just a few more notes in a few minutes. I will be joined by Ninan Varugese, the director ad interim of the UNAIDS office here in New York. He will brief you on the new UNAIDS report entitled Power to the People that's being released ahead of World AIDS Day. Also ahead of World AIDS Day, UNICEF says that some 320 million children and adolescents died every day. Excuse me, let me rephrase that. UNICEF estimates that some 320 children and adolescents died every day from AIDS-related causes in 2018. That's according to the Global Snapshot on Children, HIV, and AIDS, released by UNICEF. Any of you know what humanium is? No, I didn't know until I was given this note. Humanium. Humanium metal transforms illicit firearms in regions affected by armed violence into non-lethal commodities for peace and reinvests income into communities affected by gun violence. To date, 4 p.m., the Office of Disarmament Affairs, the permanent missions of Sweden and El Salvador, and the UN, as well as the NGO IM, a Swedish development partner, will host an inaugural ceremony to welcome the addition of a Humanium medal display in the UN Permanent Disarmament Exhibition. The display will include a watch, an ingot, and a bracelet made from Humanium metal. The events will take place in the exhibit area in the delegates' entrance, otherwise known as the Kuwaiti boat area. Finally, tomorrow we will be joined by Reem Abaza, the spokeswoman for the President of the General Assembly. And as a reminder that Thursday we are closed. You are not welcome in this building. None of us are. And Friday we will be open, but we will not be briefing, but we will be available to answer questions should you have any. And maybe you want to ask one today.
Yes, I have a question on Humanium exhibitions at the United Nations. I thought exhibitions were not allowed based on the austerity list that you sent us?
No, outside of working hours. This is within working hours.
I'll have to check.
Okay.
No new exhibits, that's what I
Okay. That was your only question?
Yeah.
Wow. Okay, Joe.
Yes. In the Secretary General's remarks or meetings relating to the Internet governance, to what extent did he bring into the discussion his statements in the past on hate speech and social media, and also did he strongly advocate for non-censorship on the Internet? As we know, some countries like Iran have closed the Internet and so forth.
Have you read his remarks? Okay, well, I would refer you to his remarks because I think they're fairly extensive on all of the issues that you raised. And he delivered them about 2 hours ago. James.
I have two China-related questions. First one, with regard to Hong Kong, we have your consistent position of restraint with regard to the protests. I don't want to ask you about the protests. I want you to ask you what the UN's position is on the actual demands of these people, because it's clear that the demands are very representative of the people of Hong Kong as displayed in the recent elections. So what does the UN make of these demands, and what is its message to Beijing about listening to these demands?
And your second question?
Well, it's a different part of China, but...
Well, go ahead.
Secretary of State Pompeo has said in the last hour that he believes the estimates of 1 million people being detained, Uyghurs being detained in Chinese detention camps. Does the UN share that view, that that figure is accurate, and does the Secretary General have anything more to say about those people and the way they're being treated?
You know, on China, this is, our position remains what it has, which is that the issues need to be dealt with through dialogue. I mean, that has not changed.
Yeah, but you have in the past talked, I mean, well, certainly the Chinese authorities have talked about activists, protesters. It's clear this is much more representative as a result of the election now. Does that change the way that the Secretary General approaches
Listen,
this?
there were elections, by all accounts, held freely, and I really have nothing to add to what we've said earlier. And your other question?
Uyghur numbers and your view on their ongoing detention.
No, I don't have any. I don't have any access to any numbers. I mean, we've talked a lot about the situation in Xinjiang. The High Commissioner for Human Rights, as you're aware, is continuing active discussions with authorities to have in order to be able to visit China. We hope those engagements continue and lead to a positive outcome. For his part, the Secretary General, and I think he made some comments to some of your colleagues in Germany earlier today, has consistently stressed the need for all countries to follow applicable human rights law. And he's also spoken in more detail on the situation in Xinjiang. And I mean, I could reread what we've read.
But again, it's always couched in all countries. This is a very specific
know,
issue.
and
There's one country that is holding potentially 1 million people in detention.
The Secretary General has raised this issue with the Chinese authority, the situation in Zhang. He's raised it when he was in China. He raised it, as I said, when he met with the Prime Minister on the sidelines in ASEAN. And his position, I mean, so he has, this issue is not one that he has ignored. It's one that he has raised both publicly and privately. Yes, and then Edie.
Thank you, Stefan. Today, because of the meeting of ISIS accountability, I wanted to ask you about this. As you know, the work of the team is to gather evidence mainly, but the biggest question is not addressed yet: what to do with these foreign ISIS fighters? That some of them, this evidence shows that they are committed these crimes. Should there be a multilateral solution for this? Should they just be returned to their countries, mostly in Europe? I wanted to know, what is the Secretary General's position about this? Does he think there should be a multilateral solution for the issue of foreign terrorist fighters in Syria and in Iraq?
Look, I think what the Secretary General said publicly not too long ago is there needs to be better cooperation, global cooperation on this issue. There needs to be accountability. There also needs to be respect for human rights, in the sense of anyone who is accused is also has certain rights. I think, as Mr. Khan said in his remarks, they have been cooperating with Iraq. They've also been cooperating with a number of other countries in order to help them prosecute these horrendous crimes. Edie.
Thank you, Steph. Does the Secretary General have any reaction to the new report by the UN Environment Program saying that countries need to begin making steep cuts in their greenhouse gas emissions, otherwise risking global warming that's going to go well beyond?
I mean, as if we needed more reminders, right? The science is clear. It's clear every day. There was a report yesterday by the World Meteorological Organization, today by the UN Environment Program. Failing to listen to the science will have dire consequences. Drastic action needs to be taken, and we need to see drastic action, and we need to see renewed political commitment. Carla, and then Joe.
Thank you. On that note, I may have missed in the past couple of months, but has the Secretary General said anything about the Brazilian President Bolsonaro's authorizing the cutting down of so much of the Amazon? I mean, since there's a tremendous push for climate change, the Brazilian president seems to be totally, clueless, and the only thing I've seen is him insulting President Macron's wife.
I mean, I think at the time this issue raised, the Secretary General spoke to it when he was in Biarritz during the G7. It is clear that all those countries who are the keepers of these massive forests, whether they be in the Amazon, whether they be in Asia or in Africa, have a shared responsibility to keep these environments alive. Joe.
Bolsonaro isn't changing, so is any follow-up at all?
I think this will be an issue that will also, I'm sure, be discussed at the COP. Yes.
Yes, I now had a chance to review fairly rapidly, I must admit, the Secretary General's remarks.
I thought you weren't paying attention to what I was saying?
All
right, fine.
Well, you didn't say, you just told me to read it.
It's all right, Joe.
I always follow your direction. Having gone over it, and I did see his references to the potential abuses of social media, reflecting what he has said before. I didn't see anything calling out any specific instances of censorship or shutting down the internet, let alone calling out any particular countries like Iran China and
I
other
think
closed
we
societies.
have spoken out.
But this was an opportunity. This was
Yeah.
an opportunity for him, at that forum on internet governance, to specifically call out the repressive societies like Iran that have recently shut down, let alone censored, they've shut down the internet. Why didn't he take this opportunity to address it?
We addressed the issue of the shutdown that took place in Iran last week during demonstrations from here, the Human Rights High Commissioner as well. The Internet Governance Forum is a very useful forum for the Secretary General, for all stakeholders to get together, to discuss the future of the Internet. For the Secretary General's part, it's about ensuring that all the positive